Okay, what is going on, MegaWhale team? Welcome back to our channel. Thanks for tuning into today's video. We're taking a look at Bitcoin today, and we've got a lot to talk about. But more importantly, guys, we want to go over a few important things before we get started. And the first important thing is our pinned comment down below. Come over to our free channel on Telegram. We post daily updates, market analysis, it's a whole range of content, and all our videos in here. It's a great place to connect to the community and listen to what I'm having to say throughout the day. We also have a sale on at the moment for our VIP. You can find all our VIP results over here. The sale is 25% off all memberships. And of course, this is quite high demand, guys. We only have 9 spots left. We've already done and given away over 41 spots. So only 9 discounts left to give. And of course, our last month of profits are 2,000% profit, 23 wins, 3 losses. We had 11 spot trades, 15 leverage trades, and 87% win rate. If you're interested in VIP, you can go ahead and contact me through there. Let's go ahead and get into the video. And there's a bit to talk about, guys. There's a bit to talk about. Obviously, Bitcoin has done a lot in the last 24 hours. There's been not a lot of movement in terms of where the price is in comparison to, 2 days when we did our last video. But the price has moved quite volatile between that time. It's had some significant up moves and down moves. And we're going to discuss about that. So let's take a look. And before we get into the macro and talk about anything else, we want to talk about the short term, because the short term is really, what everyone's thinking about. What is happening now? What is going on now? What can we expect? So let's dissect the chart a little bit. And what we can see over here is we can see our ascending wedge. We talked about that last week. We had our breakdown. We have a descending channel, which is still a bullish pattern, guys. It is still a bullish pattern in the sense that it is a downwards consolidation. We do expect the price to continue downwards until we have this confirmation of an upwards break with positive momentum. And what we are seeing here is we're seeing a descending, broadening wedge on the RSI, right? Clear resistance on the RSI over here and here, clear support here, here, and here. And we have this downward channel, okay? We had a fake out to the bottom side, fake out to the top side. All right, this is crazy, guys. A lot of people got wrecked here. A lot of bull trap, a lot of bear trap, all right? Over and over. During these periods, you don't trade. And that is why it's so important to trade with momentum and make sure you have validation on your breakouts before you enter trades. Really important, right? That's why the RSI is particularly good. So waiting for that breakout before we look to enter. And obviously we would need to clear this level here, which is at, at 19,800 level. All right, before we have any short-term hopes of moving back upwards, in my opinion. Until we clear that level, we got this resistance zone over here that we're not really looking to, happy about to enter below this range. We're more likely to head on back downwards. So utilizing RSI over here in our assistance and our aid, we can see a rejection from here downwards. We could definitely see some sort of move down to that 17,800 level, 1,600 level, and then push back upwards. All right, that would be a bottom for Bitcoin, in my opinion. That would be retesting the 9-year support line, which we'll show you in a second, and that would be an ideal case to scoop these lows. On the other side, guys, if we do have that breakout on the RSI over here, we can expect the price to continue upwards through a zone. And that would be confirmation upon these breakouts over here. That would be confirmation to enter. Okay, so we'll come back to a short-term chart later on in this video. So I do want to run some more technical analysis, on maybe the daily and the 12-hour, even the 4-hour. But for the sake of just understanding what's happening right now, there's kind of a little overview in terms of market structure, in terms of price direction and price action. You don't really want to be taking too much of a risk now. When I posted something on Twitter earlier today, I want to go ahead and bring it up. I said, where was it? It was over here somewhere. Follow the money in trading, because the first to act comes with great risk. Being the first to act is always risky, guys, because you don't have confirmation yet. Instead, wait for confirmations, identify directions and trends, and enter with greater confidence and lower risk. So what we're doing over here, realistically, is we're identifying the trend. Done, we've identified the trend. Number 2, identify validation points. Done. RSI break, zone break. And then 3, wait for that to occur and then enter. All right, and every single step we apply there, we're minimizing our risk and maximizing our potential profits. Okay, so when you're exposing yourself to a lot of risk, you got a higher chance of losing, guys. And over a long period of time, if you're taking on a lot of risk, maybe to start you might make a lot of money, all right, but it doesn't take a lot before that crumbling down and you get 2 or 3 bad trades in a row and you lose a massive amount of your portfolio. All right, let's go ahead and talk about first and foremost this chart here. Then we'll come back and talk about these two and then sum it up. We're going to keep today's video nice and short. So brave new coin liquid index, 9-year support, macro chart. A lot of people are starting to talk about this support line now. I've been seeing it pop around on Twitter a little bit more. I've seen it on YouTube now, a few other videos. People are starting to identify, you know, actually, this is a major support. This is an area of contention. This is a point that we could potentially see a bottom at, and somewhere we should be keeping our eyes on. And, you know, we've warned you for months, guys. We've told you ever since up here this support line is present. But as always, guys, the majority is always wrong and the bias is always late. So let's go ahead and get into it. Right now, guys, not too much to talk about. Is relatively the same. Now, support line is sitting at around 17,850, and we talked about how we could see a 7-day candle under, but if it closes below, we have a confirmation of a break. But if it doesn't close below and it just wicks down and comes up, it is still technically support. That is definitely possible. Be a pretty big shakeout. Definitely something that could happen. Now, I do want to point out the 200 moving average, and this is one thing that I'm really not comfortable with right now. And the one thing I'm really not comfortable with is the fact that the 200 moving average is acting as pretty major resistance right now, and we're not reclaiming that as fast as I would like that to happen. And I can't tell you why that's happening. Obviously, the economic situation is dire. There's a lot of fear in the market. People are expecting the economy to continue downwards, the Fed to continue to hike interest rates. We talked about how we think we'd actually might be wrong in assuming that. We actually think they could show some relief to interest rates, let the economy breathe a little bit, and we could see some sort of relief bounce to the markets. And now would be the perfect time for it, with Bitcoin reaching our 11th of July prediction. And obviously the 11th of July prediction was our predicted bottom for Bitcoin. We made that prediction 264 days ago, all the way back over here, and it's held very much true to that. We first predicted 24K. Our next prediction was $18,000. All of it reached, all of it perfect. Nothing has been wrong. We haven't been wrong about anything since November. So it's been perfect, guys. And everyone who's followed me, you know, thanks for trusting in me. Thanks for actually paying attention to our videos. I still have people daily telling me that, you know, I'm an idiot, I don't know what I'm talking about, and for some reason I made all this up. But all of our evidence is in our videos. If you want evidence of this, go watch our old videos, guys. It's all there. Anyway, back to the video. What actually needs to happen for us to flip bullish here? Well, personally, guys, I would like to see a bounce, but a bounce isn't bullish. A bounce is just a bounce, okay? For it to be actually bullish, we do need a reversal confirmation. That will occur when the price reaches back above this 200 moving average. That would be a confirmation of a short-term reversal, all right? That doesn't mean we're macro bullish, and this is really important, guys, because we have macro bullish and we have short-term bullish. These are two completely separate concepts. People will tend to make believe that these are the same thing. They're not the same thing, guys. They're completely different. You can be short-term bullish and macro bearish, and that is exactly what we will be. All right, we are macro bearish until proven otherwise, but we understand the significance of these levels, and these levels could provide a point of reversal. That is our opinion. That is where we think the bottom's going to be over here. It doesn't mean we are bullish because it actually hasn't happened yet. All right, so until it happens, we don't flip our bias. All right, simple as that. So when it does happen and we break the 200 moving average, we are short-term bullish. When are we macro bullish? When we break 48,000. When we break $48,000, clear the midline of the Gaussian channel, clear the local top over here. We'll come back to that in a second on another chart. That is when we're macro bullish. That is macro bull trend confirmation. Very high chance we go to an all-time high from there. Very, very high chance we go to an all-time high from there. All right. Until then, we are short-term bullish and we'll act short-term, act on that as short-term bullish, but we won't be looking for any long-term, you know, 1 year rallies upwards. Okay, whole nother video for another day. But in essence, guys, there is a difference. If you take anything away from that, there's a difference between being macro bullish and short-term bullish. So let's just assume the bottom happens over here. Let's just assume 11th of July is the bottom. We bounce over here. What would the bottom look like? And a lot of people are saying, oh, V reversal bottom, blah, 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 blah. It's hard to say. What I do think will happen, we'll see a rapid rally above the 200 moving average. So I'm kind of teetering around there, maybe a comeback down for a little bit, bounce around, up over here, reject, push back upwards, find support, and then from there we'll continue upwards. But I don't think it's going to be what everyone's expecting. And I think a lot of people in the space are expecting, you know, you're either bullish, you're either bearish. You're bullish or you're bearish. And then it's just like, okay, you're downtrend, you're uptrend. It's like, it's not that clear cut. It's not black and white. You're not just going to go down and up. All right, it's probably not going to happen. Look, it could happen, guys, but the chances of that, guys, if I saw that, I'd laugh. The chances of that is just unrealistic, man. You just have to have a little bit more of a realistic outlook. The prices will always go down more more aggressively and faster, then they will go up. The upward move takes longer because it's harder for money to flow in than it is for it to flow out, okay? So inflow takes longer than outflow, guys. So it will take a little bit longer for the market to recover than it did for it to drop. So it took 264 days to drop. We should expect it to get back to that level is going to take longer than 264 days. All right, so it's going to take some time, all right, for it to go back upwards. Let's just keep a realistic outlook on what the market is actually doing and how the market flows when it comes to money inflowing, outflowing from financial markets. DXY, guys, we talked about the 11th of July. We've given you data. We've showed you why. Let's talk about the DXY. And interest rates rising, of course. We're not going to get into that too much today, but if you do want to find out more about that, watch our other videos. We do a whole discussion on how interest rates impact cryptocurrency. We've been talking about that for 7 months on the channel now. So DXY, descending trend line on the RSI, ascending trend line and price on the price action. Bearish divergence, guys. You know what happens next. You know what happens next. Very high chance over here. We head on down, we break down below. All right. If we break down below, guys, and we get some positive news for those interest rates, maybe they don't increase as much as anticipated because everything's priced in already, remember? Priced in. But if they increase less than anticipated, we will see relief in the market. If the DXY drops, Bitcoin will go up. This is the 11th of July. A very key trigger point for the DXY, a point of which we could see a reversal, okay? Keep in mind, nothing's confirmed. We have no confirmation that interest rates will not rise as much as anticipated. We have no confirmation that they will rise. It is purely speculation for now. So we have to be open to both possibilities. And that is why we're not saying right now the bottom's 100% in. All we're saying is the very high chance we could be seeing the bottom around this level according to the charts. According to the data, well, the data is lagging. We talked about this in our previous video. Go watch our previous video. We discussed how technical analysis as well as market data is usually priced in or lagging, and therefore when you're making predictions about future speculative events, you're almost making a prediction of a prediction, and it requires a lot of foresight and understanding of not only how analysis techniques work, but you have to be able to foresee how the analysis or how the technical indicators will be looking at a period later than now, and then apply a prediction based on that period. So it is a little bit more in-depth, a little bit harder to do, and it takes a lot more experience than most people are probably aware. So if you want to find out all that, go watch our previous video. Anyway, so Bitcoin, let's go ahead and assume we break downwards. And I do want to identify this support area is a very strong support. And we'll go ahead and flip the chart just to show you. If this was a resistance range over here, you would be like, oh wow, we're at a very strong resistance. And guys, guess what? It's all flipped, it's all inverted, it's all relative. We are now at a very strong support, okay? Very strong support. So what is happening here? If we find support on this level and bounce and we clear this level here, we clear this level here, we're pushing up to a 200-day moving average. Very simple, nice little gap, we'll push upwards, all right? We already talked about that. What happens if we lose this level, guys? And that 9-year support line kind of runs through it around about here. You know, 17,800, 11th of July, it was around over here. So, you know, that's around that level where it kind of runs through. So what happens if we lose this level? It's very straightforward, guys. It's exactly what we've seen happen, and things repeat themselves. Demand support zones are very, very accurate, very relative in this market. When we lose these strong support zones, particularly support zones, don't mix it up with support levels. Horizontal levels, although they are plentiful, and we haven't identified them on a chart because there's so many of them, they're not as, I would say, reliable in regards to where price action will go. But if you use the zones are the two horizontal levels, and the distance between these levels are acting as resistance or support. Okay, very different in comparison to a singular price point. These are very reliable in terms of price action. All right, when we lose these levels, we generally see a negative or positive reaction in the direction of which it's lost. All right, rejection at that level, very negative reaction to this level. Breakdown from that level, negative reaction to this level. Breakdown from that level, negative reaction to this level. All right. Now flip it, guys. Support at this level, positive reaction to the next level. All right. Break through that level, positive reaction to the next level. All right. This is how the price works. Now, obviously, you need momentum to confirm this. It's not just the price isn't just going to ping pong around these zones, but it will ping pong around these zones most likely. So we can say the same thing over here. We're reaching this major support zone. Now, we're at a period where we're acting as support. We have to identify and be aware that this now is support. It is not resistance. It is not an area we're just going to fly right through and crash down to 12K instantly overnight. It is a major area of support, and we have to treat it as such. So therefore, 9-year support line, major support zone, DXY potentially going downwards. It is looking like it's looking for a reversal. Speculation of which interest rates are going to continue to rise. There is weakening in that bearish argument. Obviously, the technical indicators still suggest strong downside. We'll go through that in a second. Technical indicators are lagging. Remember, when you're predicting macro bottoms, guys, you're not relying on technical indicators. You're relying on market structures and the economic situation. Very different. Don't confuse the two. All right, very different. So let's take a look. If we lose this level, where do we go? Well, between these ranges is a very major support, right? This is a major support zone, all right? And our POC is between the middle. So we're looking for $12,000. I'm going to keep it nice and short and sharp. All right, how will we get there if we lose the zone? We would see some kind of move around, maybe something like that, all right? It would head down. I don't think it would take that long. It'd probably happen within this year, but it's some sort of like jagged staggering around that level, a bleed out slowly until you reach the bottom, okay? And that would be a potential bottom. Now, do I want that to happen? No, I really don't. I really don't want that to happen. I don't think anyone here who is aware of the macro structure should be saying, you know, I want Bitcoin to break this 9-year support. Unless you have a personal, want to be able to acquire Bitcoin at a cheap price. That's the only reason you want it to be there. Because in reality, guys, if we lose a 9-year trend line, we're not looking too healthy. We're not looking too healthy. So it is as simple as that, guys. I hope so far the video has been entertaining and enjoyable. I think what we'll do is we'll leave it there for today. I think that's enough information, a lot of stuff to go over. I don't want to hammer you guys with information. I think that's an adequate amount. And tomorrow's video, we'll pick it up and we'll go over a technical analysis. We'll go over the technical sort of macro, the short term, run a bunch of different technical indicators throughout the charts. And hopefully by then, the short term's developed a little bit and we can do the same for the short term. I think for today, guys, hang around tightly in the market. I wouldn't be looking to overexpose yourself to risk. I'd be a little bit more cautious today. And I'd be waiting for a reversal in that short-term time frame, and I'd be hopping on that train when it starts moving and just capitalize on the movements. Because right now, guys, the best way to trade, and always the best way to trade, is to capitalize on movements. It is simple as that. Don't just like assume a move's going to happen and jump on and gamble, otherwise you're a gambler. Wait for these levels to break down. Wait for a confirmation and enter. Simple as that. Okay, guys, so we're going to take a look at Bitget next, and I highly recommend sign to Bitget. This is where I personally trade. So if you want to be trading where I trade on a daily basis, sign to Bitget. In the comment down below, you'll see the referral link. Just go ahead and click that. You can sign up and you get access to our reward center if you sign up. And there's a whole range of different things you can do here to basically get rewards. And the rewards bonus is up to $4,163 US, which is pretty significant. But you can go ahead and get access to that if you click the link down below. Beyond that, guys, I really do like Bitget Exchange. I'm not just saying that to shill you guys a referral link. Honestly, sign up without the referral link. I don't care. I'm honestly telling you guys 0.02% trading fees is just too good to miss. You just really can't miss it. It's 0.02%, guys. It's insane. But this is the futures over here, and it's a global exchange that doesn't have KYC, so anyone can access this from anywhere in the world and get access to all the tools. So whether you're in Australia and you generally can't access futures, you can sign up here and get access to futures. If you're in, let's say for example, I think the UK and you can't get access to futures, you can sign up here and get access to futures. If you're in America and you can't get access to Binance or Binance Global and you can't access a lot of their spot trading pairs, they have all the spot trading pairs that Binance has over here plus more. They have over 250 spot trading pairs and all the big ones on this exchange that you can trade, and the liquidity is quite high. So I highly recommend signing up here, and of course, like I just mentioned, you get access to that reward center, there's copy trading, there's a whole range of other things, and go ahead and sign up, guys, because it really is probably the best exchange out there. All right, let's go ahead and get back into the video. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.